What's going on, everybody? I hope I am live right now. Thank you for tuning in. This has been a long-awaited episode. I wanted to go live for many reasons, but more importantly, because I just wanted to watch this meltdown that we got going on here in this surprise live episode. Watching the market continue to go lower and lower and lower. Shout out to the people who are going to be watching this in the future. Please remember that I am not licensed in any state right now. So this broadcast is scheduled as entertainment. Let me take a look at, God damn, this market is just going lower and lower and lower. Am I live? All right. Thank you so much, guys, for coming in. What's going on, guys? It's live during the day. I just wanted to watch this meltdown. I wanted to know maybe this is the one. This is probably not the one, but I want to catch the big market meltdown live. I want to catch it live, man. But this isn't obviously going to be the one. Shout out to the people coming into the chat room. Ryan Gets It, Bats. What's going on, Bats? Chris McKinney, Robert, Terman, Jeremy B. Yeah, I'm live. I know you guys missed the show. And I've been working on my course. Hopefully, I want to have it done this week. I'm at 3 hours now. Probably 4 to 5 would be a little bit more better. And I don't want to do a lot of the beginner crap, but I know I have to kind of touch on that type of stuff. Yes, indeed. Watching the SPX right now. And, for the most part, I'm sideways on the market, man. I'm really sideways on the market for the most part. Obviously, with these non-directional trades I had been doing recently, it was due to the fact that, in August, I had some calls and puts that weren't going anywhere because the market wasn't going anywhere. So my 25-10 strategy going into August was very ineffective. In August. So non-directional was able to keep me paid while the market was figuring out where it was going. And non-directional, in my opinion, still works. And I've now figured out that that's probably where I'm going to be, from now on. Iron condors, bear calls, or bear put spreads. Those 3 strategies are just my go-tos. What's going on, Chris? You said you're on lunch. I appreciate you watching me, man, while you're working, bro. Bats, you saying October sell-off just like last year? We'll see. We're definitely, touching some interesting, moving averages right now. I believe that's the 50, right? Yeah, that's the 50. So we're about to go beneath the 50 moving average here on the SPX. Nowhere near the 200, but, we're below, of course, the 25 if we're touching the 50. So, definitely something to pay attention to. I think, again, if you're into the spreads, of course, 31, 31.50, everything above that, you can sell that now. Or, forget about that over the next 2.5, 3, 4 weeks. Forget about it. So whatever credit is available for you to take there, you might as well just go ahead and jump on that now. Yes, indeed. I posted my trade on Twitter that I had just recently did. I had sold the SPX 3025 against the 3050, I believe. I posted it on Twitter. And I sold that last week. And it was, the theta was burning off real nice. But I wasn't expecting a big move to the downside. I was expecting, for those guys who've been, reading my Twitter, just the continued sludge higher. And then eventually we would hit that, 29.90, and then 29.90 to 30.10. We'd just be sitting around there. So this was a really nice move for me. What's going on, Spencer Gordon? Yes, I am, Jeremy B. So let me know what you guys are trading. We'll pull up some charts and take a look at what you guys are looking at. All right. And let me know in the chat room what you guys are feeling out, what you guys are looking at. Yesterday was a bit of a scary day a little bit because Apple was going hard, boy. Apple had the whole market up yesterday. Apple, and then it was Merck. Basically, news had came out of Apple that the sales maybe weren't as bad as people thought they were. You also had an upgrade, but I believe by JP Morgan on Apple. I think they put another like $30 or $40 on the price target for Apple. So had the whole market up. If you guys know, obviously Apple is the top five, one of the top five components of the SPY. I believe it's almost like 4% of the SPY. So a big move in Apple is going to send the whole market up higher. You got a lot of ETFs that have a lot of exposure to Apple. So a big move in Apple moves the whole market. So yesterday was definitely not a great day for, theta buyers because market had the market up big. But this was the nice move today. That ISM number came out showing exports lower. You had the largest decline in U.S. manufacturing in 10 years. In 10 years. All right. This is huge. This is huge. This is huge. This is really, a game changer for the market. I don't think you throw every put you can so far, but all it says is it just doesn't justify, all-time highs. It just doesn't justify all-time highs. So this is an opportunity for you to grab the XLI, which is the State Street ETF that gives you the exposure to the Dow Industrials. I believe Boeing is like the biggest part of that. Again, this is an ETF that's in the course too that I teach. So really, really, really interesting. And if you want to sell one thing and really get exposure to what just happened today, it's definitely going to be that XLI. You got a 3-day put on Apple? Okay. Let me see. You got a 3-day put on Apple. AAPL, right? Okay. All right. It's going to be interesting to see. Yeah, Apple's a pretty good sell here. I mean, based on the news that's coming out. You know what I mean? Let's zoom in a little bit. Let me get at least a 30-minute. Okay. Yeah, I mean, here on this 30-minute chart, why not? Take a risk to the downside. You said 215. Why not go in the money? 215 is, you're out the money, which is fine. The market could very well come to you, but why not buy a 228 put or a 230 put instead? But I understand. If you feel the market's going to come to you, then so be it. But I like those in the money puts if you're going to go directional, just because, when you get an in the money put, that's, with a nice delta on it, an 80 or even if you can go up higher than that, if you can go 235 or something like that's even better, more expensive. But when that stock moves down, boy, you're going to get a move on that option. And it's going to be a very liquid option for you to dump into the market and sell with a nice profit. What's going on, Gary, the truck driver? Dan F. and Dizzle, good morning. Yeah, I just wanted to join you guys for an hour or two, see what's going on with you guys and what you guys are trading right now. Gold is very interesting. Gold is very, very interesting here. It's still oversold on the weekly charts. It's still oversold on the weekly charts, but I'm very happy to say that I was really one of the first YouTubers to really kind of talk about gold in a way that we should really be acquiring gold and be serious about it. My last few live streams, we talked about gold here back in May. back in May, April, GLD 120, 121. And, it was one of those things where I had a couple contracts in it. I wish I gave it a lot more time. But now that I've gotten very comfortable with the futures market, I've got some futures on gold that I think are going to be very, very lucrative in the future. These prices on gold, whether you're talking about these 1460s that we just visited recently, 1500, which is the high recently, a year from now, these are going to be prices we're going to be dreaming about having again. The debt levels, whether you're talking about corporate debt, you're talking about, state, just our local, where we live, our municipalities, our counties. I mean, debt, it's just incredible the amount of debt that our governments have taken on to foster this, economic growth, which hasn't really been growth. You're looking at some of the GDP numbers, 2%, 1.8, and it's like, we've just been really kind of keeping ourselves above water here. And we've got the president demanding lower rates. Let me tell you guys something. Lower rates, banks lose money when rates go lower because you refinance that debt. All right. If you're a bank, your customer refinances, you lose money. All right. You lose money because you've written that loan in hopes that they're going to, carry that loan to the end of the obligation. Right. And if you're a financial institution, that's what you hope for. So you don't want to see customers refinance. Right. So as a financial institution, banks lose money on lower interest rates. And when you get to a point where you're at zero, you're at negative, nobody's gonna loan money. Why bother loaning money? So everybody's just going to keep money in their pocket because it's just not worth the cost. Loaning money has a cost. These companies, these financial institutions, they've got employees, they've got obligations, pension plans, a lot of them. So they've got cost associated with that, with lending capital. And when you're squeezing those margins, which, by the way, are already small. I mean, if you're reading some of these financial institutions, for example, I read the last Wells Fargo, they're basically not making any money. Wells Fargo, for the most part, on their institutional retail business, they're not making any money besides fees. Their biggest profit margin was on fees. They're not making any money on home loans. They're not making money on the refinancing. So it's tough for the banks on the retail side. You've got these startups that are eating into their businesses like crazy. The SoFis of the world that are basically offering free bank accounts. They've got no physical locations, virtually less than 2,000 employees. They're eating away at the traditional banking model. So they're not making money as it is. So, technology is just feasting itself on, traditional banking to the point where, we're going to see some serious trouble, in some of these names. Here's XLF, which is I've been watching for a while now. XLF, the inability to really break that 2018 high. Go back to that 2018 high. What was that? 28.35. I think XLF, I haven't even made a video about this. I've been wanting to make a video about this. I think XLF is an incredible shorting opportunity here above 28, above 29. I mean, you can, I know a lot of you guys, you're day traders or you're weekly, but I swear if you're willing to go out a little bit long and grab that 28.50, that 29, 60, 90, 120 days out, I think if you're willing to sell that, I think that data goes right into your bank account, man, or into your trading account. Because when you read what these companies are saying in their statements, they're struggling. What's going on, Ken? So loving the increase in volatility, time to sell vertical. Oh, absolutely. That's exactly why I've gone directional, non-directional, um, for the most part, because uh, we're going to have, you know, the administration do what they can, but there's only so much they can do. One thing about these rate cuts is that when you can only cut so far, right? You can only cut so far. We've been having these repo, uh, you know, situations going on at night where they basically been just doing their best to save the world in the middle of the night by, generating, literally creating out of thin air billions and billions of dollars in capital. Over the last 2 weeks, the Federal Reserve has given the entire U.S. defense budget in 2 weeks to the repo market. The entire U.S. military defense budget just to save the repo market, which is basically the lending market between banks, as banks no longer trusting each other to lend capital to each other. Because that's basically what it is. I give you money and then tomorrow you pay me back. And now there's some, lack of trust there. Some lack of trust there. I've been seeing Yahoo Finance, for you guys who watch business media. Yahoo Finance has a little, daytime streaming thing going on. Owned now by Verizon. They've tried to remake that losing acquisition. But, they tried to spin the SPY or the, saying that we're up 15% or something like that. They're literally taking they're taking December or January 1st to where we are now. They're not including, where we were before October surprise last year. We really haven't gone anywhere over the last 12 months, 12 to 24 months. We really haven't gone very, very far anywhere. We really haven't gone very far. All right. We're just off the lows of the day now. Just off the lows of the day for now. Anybody taking advantage of that Wayfair call? I mean, my Wayfair call was so beautiful. Oh God, I made so much, money off Wayfair. I know I'd been shitting on Wayfair for almost a year and a half. You can go back on my website, Advanced Equity Research. I have a couple articles on stocks that are going to be incredible shorting opportunities. All of these unicorns are incredible shorting opportunities. Peloton, I posted on Twitter. I tried to grab as much Peloton as I could. Unfortunately, there are no shares available. Wayfair Wayfair will go out of business in the next 5 years. Period. Wayfair will be out of business within the next 5 years. Macy's, that pretty much is a done deal there. I wouldn't say there's any meat left on the bone there. You're going to be waiting a while there because they've got some capital, they got some cash to work with. So you really want to go after companies that have been able to sail the last 3 to 4 years on massive losses. What's going on, Donzel? What's up, bro? Shout out to all the people in the chat room, man. You guys have been with me for years. Appreciate you, all of you. Patrick Lindsay, what's up, man? Good. Christopher Joel, what's up, man? T. Kelly, hello. So, for those of you guys who, want to look for some long-term winners, definitely going to be, companies that, again, have been skating by on massive amounts of leverage that we are now seeing the tide turning. For example, you just saw the WeWork IPO get canceled. And, that was really just embarrassing for the financial institutions and for business media because they were so excited about it. CNBC trying to flip the script like, yeah, we work, but they were all on board. They were all on board for the IPO. And they were ready to sell you WeWork for $74 a share. Then they cut it in half. Now they're talking about, now they took it off the table, period. But it had went from 74 to 36, and then they were talking about maybe 27. Now it's off the table. But they were ready to go to market WeWork at $74, $75. These people don't care about you at all, man. And look at Peloton. That's why I wanted some Peloton so damn bad. What's going on, David Lincoln? I was going to throw my whole account at Peloton because I already know this is going to, we're going to go to sub 15 easy on this. This is a company that has made themselves possibly liable to hundreds of millions of dollars in lawsuits in regards to music, right? Because basically what they do is they stream. If you go to a Peloton class, they go on YouTube and they'll play a playlist from YouTube. So they're saying that, well, we don't own the music. We play it on. We buy the CDs. We play it on through streaming services. So therefore, we don't have to pay to use these songs. Well, that's not how copyrights work. That's not how copyrights work. So they're sitting, and they got some lawsuits pending right now because of that. What's going on, Life for Business, SC Trucker? Oh yes, Leon Bunce. Yeah, appreciate you, bro. Appreciate you. Yeah, man, there's a ton of pre-foreclosures and all that out there. And speaking of all that foreclosure and stuff, once this market falls apart, there's going to be a ton of foreclosures out in the valley for those guys who live out in California. I feel sorry for people who live out in California, dealing with that homeless situation just because, again, that's what cheap capital does. That's what cheap capital does. It creates massive amounts of homelessness as people are able to scrum up capital to go into predominantly poor communities and, buy people out. SPY down, we were at 1% for the day, but we bounced here somewhat as some traders look to buy the dip, because you're always going to have capital to buy the dip. You're always going to have capital to buy the dip, and that's really the fallacy of passive investing. Passive investing, that in itself is a bubble, and there are tons of videos on that because, all of these ETFs, what they don't do is make you price conscious. You're not price conscious when you buy into an ETF. You just, you go to these financial seminars and they just say, hey, go buy an index, buy an exchange traded fund. And you don't know what price that the fund is actually buying its components at. You're just putting your money into the fund. That's just buying and buying and buying. It's not price conscious. And we're going into, I believe, a moment in time where people are going to be sensitive about price again. People are going to really start asking themselves, what is the value of this business? How much am I really paying for earnings? Is it worth it? Said JUNG. Are you talking about JNUG? Are you talking about JNUG? Yeah, you got to move across the gold markets right now. And that's basically what's going to happen. But at the end of the day, gold is still relatively oversold. Again, on the weekly and monthly charts, we had a huge move in gold. So just be careful because it is a bit extended Obviously not JNUG. JNUG, again, this is the miners of gold, but junior miners to be exact. And I believe when they say junior, I believe they mean the miners with a market cap under 500 million. You might want to check on that, but I believe it's under 500 million. And of course, you can play that another way with GDX as well. But JNUG is the leveraged 3x leveraged ETF. Which is a tricky one to play too. Right. So yeah, Iron Condors. Yeah, you want to play the Iron Condor on a day like today. So on a day like today, when you got a huge move down, this is where you would want to lock in that volatility if you think things are going to cool down over the next couple of days. I don't believe that's going to be the case. So that's why if you want to go into the market now and make a move, I would look instead into a bear call spread. So looking at a particular ticker you're interested in and finding levels you believe the stock will not reach over the next several days or weeks. So you wouldn't go with an Iron Condor right now. You would look at a bear call spread. So that's why, for example, we had someone in the chat room wanted to buy the 215 Apple, and I said, why do that when you can go on Apple and instead, why not sell, for example, 245 against 250? Why not do something like that instead and let that theta, sell those calls and let that theta come into your pocket, as Apple may be unlikely to reach those levels over the next couple weeks. Yeah. But when you have a situation where you're in an Iron Condor that at the time was low volatility, and then volatility starts to happen, it can shake a lot of traders out their trades. Now, you've got to then at that time make a real honest assessment about, what is the likelihood of that Iron Condor being broken on either side of the trade, whichever that is. If you're at, probability of like 95%, and you still have, if it's a 60-day Iron Condor and you still have like 55 days left, then you got to think about, do I stay or do I, if it's a stock, then more than 9 times out of 10, if it's going straight down, then you might want to think about going out. If we're talking an ETF or an index, then you got to think about, hey, is this going to be something that might, eventually find some support and then level out over the course of the trade. 2 weeks ago, 30 days, 77 cents. Okay, yeah. Yeah, that's one of the things that I'm teaching in the course. It's 70, 80, and then 90% probability. For the account, I call 90% probability the account builder level, particularly 90% on futures trades. That's an account builder level, because let's say you only got $5,000, $7,000, $10,000. You really need to get that kind of doubled over time. Then I always suggest those guys get at about 90% probability and work on the next several months, just getting that account size growing. So you need to be looking at very high probability trades when you don't have a lot of capital. When you're above 15, 20, 25,000, then you can really start saying, okay, let me put some numbers to risk here. But if you don't have a lot of money, every dollar matters. So you need to be really cautious about taking trades that are too risky, because when you've got $2,500, $3,000, and you lose $200, $300, $400, it takes almost double or 3 times that to make up. So you're constantly starting over. So what you'll happens is guys who have very little capital, they'll look back over the course of 24 or 36 months and it's like, damn, I haven't really gone, I haven't really grew this account. Well, because you were taking too much risk. Where if you had just started off with just being a lot more risk adverse and then just, getting those base hits over the 36 months, now you're saying, oh, wow, okay, I started with 2,500. Now I've got 7,500. I've got $8,000. Now I can take a little bit more risk. So let's see what other things that you guys are looking to do here. And man, I was teaching. I don't want to name the name of the organization here, but it's basically an organization that helps guys who got in trouble with nonviolent offenses. So I taught a finance class, and obviously, when it comes to like the 401ks and stuff like that, I'm not too privy on that. Obviously, I gave some pretty basic information, but more importantly, I gave them sources and individuals who they can contact if they want more information about that. But that was a very rewarding feeling, man, to have those guys come into the class, many of them who didn't know anything about trading or stocks at all. But over the course of that 3-hour lecture, they left out feeling like, okay, now at least they know what it is. They know how to get started. And man, that's very rewarding. So for those of you guys who know a little bit about that, maybe there's a way you can get involved in your local community to spread the knowledge, but man, because it felt really good. I really just did it as a favor for somebody, but I left that feeling like, man, it's really good to teach people how to do some stuff. And some of these guys were like almost twice my age, but it felt rewarding to give out that information. All right. Let me see. I'm looking at some other trades here. AMD has been looking like a sleeper, man, in terms of just, for those guys who've been with me long enough, you remember AMD in the single digits. Obviously, the ETF is SMH. This is one I've been following too as well. That red line on 123, I was looking at as a possible short opportunity on SMH. I said, hey, if we get above there, this I think was September. What was that high? September 12th. So man, if we get above there, then I'm definitely going to try to be looking at some shorts at that level. For those guys who don't know, this is the semiconductor ETF. A lot of exposure to China. A lot of exposure to a lot of companies that, again, aren't very, very profitable, but are the leading drivers of the economy right now. NASDAQ as a whole is pretty expensive. NASDAQ as a whole is pretty expensive. Disney, Pfizer, and Apple going to be around for a long time. Oh, yeah, absolutely. I mean, they've already been around for a long time. If you look at some of Disney and Pfizer, for example, if you read Walt Disney's book, that's a racist asshole in itself, but that's a different conversation. But Disney, he talks about how, a lot of his early employees, they're millionaires. A lot of Disney's early employees are millionaires right now. Anybody who jumped on the Disney dream early, they're very, very wealthy. Here's Disney. I've been watching this stock for a while too. I've been looking them out. This is probably going to be a gap fill, but when they came out with the streaming service Disney Plus, I believe it's going to be called, I think that's going to be a big winner for them. It took a huge hit to Netflix, and that's why Netflix is struggling the way they are. But I'm looking at Disney as a possible gap fill. That's why I had it marked there, and we're still treading that line. Thanks for bringing it up because I almost forgot about Disney. I do have an alert set on it though. If it decides to fill that gap, which I think it could do, Again, if this recession is real. There were a lot of people who are saying that the recession may not actually happen because even though the 10-year and the 3-month is inverted, right? So we got an inverted yield curve, which is the 10-year treasury rate and the 3-month, um, which typically signals that we are going to be entering recession within the next 16 months. They were saying that, well, if we get interest rates down to zero, there'd be so much capital that it wouldn't matter, that markets would still continue to go higher. And personally, I think that's bullshit. Personally, I think that's BS. So any exposure to China right now is not good. Yeah, I agree with that. And I made a video a little bit about that because we've got some people selling false ideas about China and what they really mean and what's really going on. I understand, like, everything was going fine for the most part. Everything was going fine. A lot of the volatility that's happened over the last 60 to 90 days has been completely man-made. These trade wars and what we've been doing to the agricultural sector with the trade war. Things were going just fine. We would be right now, we'd be at 315 SPY. We'd be at 3110 SPX if it wasn't for the China trade war. We'd be at those levels right now. But they dug themselves in the hole, and now they got to get themselves out of it. Now they're talking about peeling back a lot of the demands that they wanted, and it's going to end up being a huge embarrassment. End up being a huge embarrassment. One huge Chinese ticker, I think it's MHCI. Is it MHCI or something like that, or MCH? What's the China ETF? Hold on. There's a China ETF that's got a lot of exposure. And I know what you guys are talking about, like the yings and the yangs. Those are the leveraged ones. But there's another one that's like an M. What is it? MSCI or something like that? Yes, MCHI. There we go. MCHI. The iShares China ETF. This is a pure China ETF. It's got decent volume on it as well. I don't know how liquid the options are, but this is a very much a pure China ETF. And of course, you've got your leveraged ETFs, which is yin, right? Which is yin, and then you've got yang. So yin, YINN, and then yang, YANG. YANG. And this is a triple leveraged bearish ETF, which looks like could be breaking out here higher. But then again, it is again a leveraged ETF, so you gotta be careful with that. We had that TVIX. I had a guy come into my TVIX video that I just posted 2 days ago, and he had asked me, man, am I glad that I bought? Should I be happy that I bought 5,000 shares of TVIX? This is 2 days ago. And I told him, hell yeah, you're really getting in front of it. And he should be a very happy man today with that move in TVIX. Depending on where he bought it, he may be up as much as $3 or $4 a share off TVIX. Volatility now at 17.9. And I had mentioned on that video, that death cross that we've got going on right now in TVIX, where this white line, the 50 moving average, is now above the 200 moving average here on the VIX, and it's starting out so similar to, so many times before when we've seen that, particularly going back to, December, end of December, right? End of December into that horrible, October of last year where we had that similar cross. You do have volatility that happened before then. So the volatility is a little bit late in this month for this year, but a huge move comes after it. Obviously, we know that occurred because Jerome Powell had came out and said that he was raising interest rates, and the market didn't even want to hear about that because, again, these companies have taken on so much leverage, they can't afford to pay. They can't afford to pay back the loans that they've already taken out. So that's why we're continuing to cut rates so they can refinance and take out more debt because they can't pay out the debt that they're taking out. That's why we're cutting lower. It has nothing to do with economic growth or anything like that. It's because, if I can't pay the loans out that I've already taken, I need to pressure every politician I can to refinance that loan or to push loan rates lower so I can refinance it lower and lower and lower while I still need to borrow money. All right. And eventually there's going to be an end game. And that end game, I don't care. Guys, you got guys who are saying, well, 2020 recession, it doesn't matter. Let me tell you something. If you're under the age of 65, you're watching this right now, forget about 2020. What about 2021, 2022, 2023? I'm not tripping over 2020. Whatever happens in 2020 is going. I know we're going to have lower prices eventually, because you can't keep taking up. You can't not keep taking loans like the way some of these companies have been doing. You cannot continue to borrow and not feel like you gotta not pay back, the piper. What I think about Zuckerberg saying he might sue the government, well, he's got a right to do so. He's got a right to do so. You got to understand, Facebook is a free service, man. Facebook is a free service. You've got the government saying that Facebook is a monopoly and Facebook doesn't even charge you. See, it was one thing when the government said that Standard Oil was a monopoly. You had to go to Standard Oil. You had to go to Microsoft. But you don't have to go to Facebook. So I understand his point of view. He says, I offer a free service. I don't ask anybody for their social security number. Why are you trying to break up my company when I don't technically sell anything? So he's got a point. He's got a point. Nobody's forcing you to use Facebook. You use Facebook because you want to and because maybe people in your social circle are using it, but it's not a requirement. There are millions of people around the world who don't have a Facebook account. So yeah, he's got a point that he can make. Where is he going to win? It's really hard to beat the government. But look, man, he's got a bag to work with, so he can afford the best lawyers, and they'll figure it out. They'll figure it out. VIX holding steady here at 18. Let's take a look at the hourly. All right, so we're pulling back a little bit, but for the most part on the selling. Take a look at the hourly. All right, so yep. Got a little bit of cooling going on here. Gotta love the hourly chart. It's always a great opportunity. Hourly chart does a really good job of getting you in at some really great levels. This is the 50 and 100 moving average I got you in right now. SPY trying to hold its own here. Let's take a look at the industrials. XLI. Woo. Yeah, that definitely is going to get real ugly on XLI here over the next couple weeks. As again, we just learned that the ISM manufacturing number, which basically is the manager's purchasing index, which measures exports, manufacturing levels in the United States, worst numbers in 10 years since 2009. Basically the bottom of the recession. Worst numbers in 10 years for industrials. Yeah, Gunner. Just as I said, the ISM number, we just got some really bad. And by the way, that number came out at like 10:30, so that's why the market started off good. We had a nice pop in the morning, but the ISM number comes out at 10:30, so that's why around there, that's when we started having this BS happen. But now we've sold off here, and the longs are reacting clearly on Twitter and stock twits. They're going crazy. Recession is a good thing for people with little money. Absolutely. Recession is the best. A depression is the best thing. If you're poor, the best thing that could ever happen to you is a recession or a depression. If you don't have a lot of money, that's the best thing that could ever happen to you is a recession. If you remember, coming out of 2008, the cash for clumpers, there were a lot of people who had a lot of old and crappy cars that were able to get into some new vehicles because the government was so desperate to reinvigorate the manufacturing sector, the car industry at that time, that they were giving as much as $4,000, $5,000, $6,000 for cars that weren't worth $400, $500. If you remember some of the ads, hey, if you can push it, pull it, tow it in, we'll give you cash for your clunker. I remember it like yesterday. I was working at a port department at a dealership. All of a sudden we just had shitloads of cars come in and we had to clean for delivery. So there's a lot of opportunity for people who don't have a lot of money at the bottom of depressions or recessions. Home loans that otherwise you'll never be able to get access to credit is made much easier during a recession and a depression, particularly for people who don't have a lot of capital. The risk levels are significantly lower for institutions in a recession than at the top. I'll call my old man later. A little bit. So the government need for Facebook for information. Yeah, I've already heard about that. The government and Facebook have been working together for years. For years. Yeah, I mean, any police department that requests information in regards to you and your Facebook and your social media, Facebook hands it over. They've done it. They have a whole department for that. But yeah, man, you got a lot of people who are getting priced out of their homes, out of their neighborhoods. For those of you guys who know people who live in apartments, these institutional investment funds that have been able to take a lot of this cheap capital and come into communities and buy out whole neighborhoods, whole blocks. In a recession, that can't happen for the most part because the amount of money required, they're not willing to put out that kind of capital But you as an individual, if you're looking for 120,000, 200,000, 250,000, you know, there's specialized programs created for people like you in those kind of environments. But you're not going to start a $20 billion fund during a recession and just go out and buy. Nah, not going to happen. Not going to happen. In fact, the only times those happen is when you get at tops. Where you get these just flood. I think Blackstone, by the way, just created like a $50 billion fund. Those only happen typically at tops. And of course, during a recession, they lose that capital because their credit lines get cut. Financial institutions take back that money. They just close them out. In fact, that's one of the things that started the recession was the fact that credit that was extended was canceled. What restarts recessions literally is the lack of borrowing, lack of capital, lack of access to capital. Where banks feel like there's just too much risk on the table, so they pull back. And it affects risky borrowers too. For example, you got a $30,000 credit line. You're a relatively risky borrower. Next thing you know, you get an email or a letter saying, "Hey, we've cut your credit line in half." No real explanation given, but that happens as well too. Online brokerages getting trade. Well, that all, and you can thank Robinhood for that, Cali Rob. It all started out with Robinhood. Shout out to Robinhood. They changed the whole game, man. A lot of us who are in business today that wouldn't be in business if it wasn't for Robinhood. Robinhood came around and changed a lot of lives. So they were really the beginning of all of this. Let me see, where is GM at right now? Yeah, I figured GM would be. GM, that's another like 4%. GM is a 4% part of the XLI. They're a big part of that. And one of the sectors I think you guys should also be focusing on for those who love to short are some of these car sales companies like the CarMax. I think CarMax is CMX, right? Or is it Car? Isn't CarMax public? I think CarMax. Okay, there, KMX. Oh, okay. The CarMaxes of the world, where they when things get tight, this is going to be a dream short here. This is going to be a dream short here when things get tight. They've had a really good run this year, huh? They've had a really good. Okay, a lot of meat on that bone. Okay. Yeah. Right now, there's a lot of money in the trash waste industry. Oh, yeah, that's always going to continue to grow. Yeah, you're always going to see, real quick checking on Walmart here. Walmart, I got this as a really interesting possible shorting opportunity here at Walmart between 115 and 120. I think it's pretty dangerous up there for Walmart, but let's see. Walmart's been, they've been putting up some really good numbers, but as we always know, just similar to 2006, 2007, the best earnings reports come out at the top. You go back and read those 2006, they're some of the best numbers are at the very top. And I'm thinking that's where Walmart is right now. But I can't make up my mind to pull the trigger on Walmart right here. But this is a really interesting level here when we got that 60 RSI rejection here on the daily. And I made a video on that using John Hayden's levels for RSI, which he said for negative was 60 and 30, for positive was 40 and 80. So it's going to be interesting to see what happens with this stock here moving forward. But yeah, getting to your question about the waste. Yeah, I mean, that's always going to be big business. But at the same time, you got to understand that, these municipalities that have extended contracts to waste management, they're going to be at risk. They're going to be at risk as well too in a down cycle. So, not saying that you're going to see cities go without trash collection. That's not going to happen. But those numbers may have to be reworked, right? You may have to see waste management revise their numbers. So I don't know if they pay a dividend or not. I do believe waste management does pay a dividend. I don't think the dividend will ever be at risk, but you can definitely see where numbers could be revised in terms of how much they're actually going to be pulling in. M1, which stock are we talking about? I just want to make sure before I comment. America and Canada sending waste to other countries in which they're sending back. Yeah, I've read a few things about that, about waste and, the Philippines and all that stuff. They're sending waste back. I think Canada and the Philippines was going back and forth on that. Yeah, divergent. Yeah. Obviously on Walmart, right? So yeah, Walmart's looking like a great short opportunity. That's why I've marked the chart the way it is. I think it's a great shorting opportunity here. And again, if I'm looking at Walmart, it's about going out a couple weeks and again selling. For example, I'd sell the 120 against maybe 125. 120 against 125, and then see whatever credit that is that I'm taking in, and take that as a position, because it's something that won't sell off right away. That's what I love about spreads, is that you don't have to be right away, unlike directional trades, where if you just buy a put and you've got 7 days on it, 15 days, 20 days, you got to be right pretty soon, or that trade's going to get really ugly for you. Whereas on the spread, I can go out 60 days, which is my preferred time, and I may not be right for 2 weeks, but then after 14 days, it goes my way, and then those losses literally turn into gains. Says Robinhood needs competition. Robinhood does have competition. Robinhood has competition. First trade is free. What else is free? Webull for the most part is free. SoFi, I think SoFi's got a little thing going on there. They're free. What's that one that's like in Malaysia or something? I forgot, but it's by a church or a Christian organization. I forgot what they're called. But it's like $1 each way, unlimited shares. And it's only stock trading though, but I forgot what it's called. I've made a video on them, by the way. It's off the tip of my tongue, but I can't remember. But yeah, Robinhood has competition. It's just that Robinhood is they've made trading so easy. So easy, they've been able to become number one for a lot of young people, because it's so simple to do. What's going on, LK Raw? I'll change the W. Okay, change the H to a W. Appreciate you, bro. Yeah, but Robinhood has competition, but and then they really came up with the Bitcoin thing, which, by the way, I never, Bitcoin is just a joke, man. Again, I've always said that Bitcoin was just, in my opinion, nothing more than a way for the wealthy and the educated to extract capital from the poor. But they're gonna figure out a way to make this work some way, somehow. But for the most part, I hate Bitcoin. I hate Bitcoin because if you think the gap between rich and poor is wide now, you don't want to see how it's going to look in a world where Bitcoin is the mode of capital. That's why I'm backing gold. I'm pure. I'm backing gold. Yeah, so I pray for Bitcoin to continue to go lower and lower and lower and lower until this thing is tulip mania. Curious to find out how the free version of Interactive Broker. I don't know. I hope it looks good. I mean, I use Interactive Brokers, and if it looks as crappy as the current design of the current IB, then it's not going to do very well because Interactive Brokers looks like shit. I mean, the platform is straight out of 1999. But again, it's geared towards, it is geared towards institutional money managers and hedge funds and things like that. And those day traders, particularly futures traders. So it's made to run on like old computers, or not necessarily old computers, but just computers that just aren't going to have graphics cards in them. So it's a very basic looking platform that isn't as beautiful as, nowhere near as beautiful as like a Robinhood or anything like that. So it's just got an ancient design. But it's going to be good. I mean, if it's going to come with that world-class customer service, because they got world-class, I got to give it to them. IB has world-class customer service. You call them up basically anytime. Somebody's going to pick up the phone and go through your trade for you. And, I mean, they really are white glove service. They really are white glove service. And I've never had anything bad to say about Interactive Brokers. And like I said, I lied to get on Interactive Brokers because when you're on Interactive Brokers, to get an account at IB, when you're under 21, you only have to put up 3,000. When you're over 21, you got to put up 10,000. And I got on Interactive Brokers when I was like 24. And I lied on the application. And I put my date as like 17 or something like that. They approved me. Gave them all my social and everything like that. And then once I got the account, I went back in there and changed the date. And they never got back with me about it. I remember one time I lost my password, and this was before I had changed the date. And I couldn't remember what date I selected. And I was like, man, bro, I lied on the application. And he was like, okay, whatever. So it happens often. It happens often over there at IB. But I had said that I was under 21, so I could just put up the $3,000 to get an account at IB. That was funny. Let's see what else is going on here, man. All right, so market still we're hitting back to the lows. We're down 1%. Down 1%. What I've learned over the last couple weeks as well is that if you don't know whether or not the market's going to go higher, but you're not really sure how fast the velocity of the market's going to be, instead of playing the index, you can just play crude. You can just literally play crude oil on the futures market. Now, we know that for the most part, for the market to continue to go higher, crude has to stay below $60 a barrel. Above 60 is where the market kind of has trouble, but below 60 and crude, believe, let's see, can I show crude, which is CL, and crude, oh, nice discount here on crude. And as you can see here, crude down to 53 now. Man, crude, it's a 30-day contract, which settles into cash. No, it doesn't settle into cash. It settles into it settles into money. It's not called cash. It's called something else. I'm sure I got a futures trader in here somewhere. But you can do spreads on crude. And let me tell you something, folks. It is quite lucrative, and I teach that I teach this in the course as well. We put some trades together in crude using the futures market, and it is lucrative, very lucrative to trade crude using futures. Again, futures, no PDT requirement. You can literally trade crude, trade futures with like $500, and and this is futures options as well too. So no limit, no strategy is really out of use or out of your ability to do with crude or some of these other opportunities. So there's crude, there's silver, there's gold, and that's where it's a much more natural play than sometimes the indexes, because if you like, hey, I think the market's going to go higher, but I don't want to get ran over by a speeding train, so let me just play crude, and the probabilities are high. I mean, there's some crude trades that I can show you, and that are literally above 99%, that still have credit to take in. Like literally the only way you're going to lose at this trade is if war happens in Iran. It's literally like the only way you're going to lose at that trade. I mean, wide from like 40 to 82. Now you got to go out like 77 days. You're only going to hold for like 30, right? So you're not going to get max gain, and I wouldn't ask anybody to get max gain because there's just no reason to do that. But their crude is a very lucrative thing to trade. And again, like most of you guys, I'd always heard of gold traders. I've always heard of guys who specialize in crude. Hey, I'm an oil trader. And you have that on Twitter and stuff like that. But you never really realize until you look over there and you're like, wow, okay, yeah, there's some real money to be made over here. There's some real money to be made over here. Did respect and fear the U.S. dollar strength? Absolutely. And Trump has got it all wrong. He thinks high. Jerome Powell has nothing to do with it. It's the fact that you got millionaires in Venezuela, Colombia. South America is doing horrible right now. South America is doing horrible. Those of you guys who know what's going on down there. If you're wealth, and then making the dollar strong. All of these exotics are all, people talk about fiat currency, this, fiat currency, that. What's worse than the fiat dollar is the fiat peso. You know what I mean? Go to Africa. Any of those fiat currency, those are 100 times worse than the fiat dollar. That's what those Bitcoin people don't understand. Like, you can talk fiat dollar, but fiat dollar is better than anywhere else. It's better than anywhere else. I'll take a dollar over a yen. I'll take a dollar over a Mexican peso. I'll take a dollar over anything else. Any components, investments involved in Tesla, buy. been a minute since I've checked on Tesla. Yeah, way too volatile for me. Here's Tesla 243. Tesla is the future. Have I checked out derivative crypto exchanges like BitMEX and Bybit? I haven't played on those. I haven't played on those Pygons just because I'm suspicious of their ability to pay. Um, I don't know what they got going on, man. I'm very suspicious of exchanges that are outside of the United States because the United States, for all intents purposes, when you start a business like an exchange, you got to put up, a couple $100 million. And a lot of times these people go to these other countries because they don't really have to put up so much money. They don't have to put up so much money. Is that dollar strength is bad for energy, metals, and most other currencies? You live in the energies and metal space? Yeah. Oh, of course. I mean, look, I'm not saying the dollar is the best thing in the world. It's lost a lot of value since 1913 or whenever that Bretton Woods agreement was signed. I'm with you, Dollar Will. I'm with you. But at the end of the day, if I told you to come work for me, you would take dollars than the Uganda, whatever they pay in Uganda. You know what I mean? Let's just keep it 100. You know what I mean? So we got to be honest about that. You say you won't touch cryptocurrencies. I'm not going to touch cryptocurrencies until the government says I can use it to pay taxes. You know what I mean? That's when I'll touch it. When I can go down to the DMV and pay my speeding ticket with a cryptocurrency, then I'll be serious about it. But until then, I'm not going to risk my financial future on something that my government won't accept. It's just, what I mean? Now, it's like you telling me to buy a deep out of the money put or something like that. I mean, you having me put out this risk that may never happen. You know. Absolutely, Felix. So we can all talk a lot of crap about the dollar, but I'm still I'm still working for it. Most of you guys are still working for it. You know what I mean? That's why you had some of these Coinbase was so happy to pay their employers in Bitcoin. Yeah, of course you're happy to pay in Bitcoin. It ain't shit. You know? ZM. What happened to Zoom Communications? Okay. SQ is another heavily leveraged unicorn, SQ, owned by Twitter. This one looks like it's having trouble, but it looks like it just bounced off that 2019 low, that 2018 low. But Square is another one that, boy, that was a stock that hit 100 toward the end of last year. There are a couple stocks with a lot of meat on it that I can't wait to get a piece of. Home Depot. Home Depot is another one that I'm looking at. Home Depot is another one that that looks so delicious at these highs. I'm just looking for some more horrible data, and that horrible data is really job numbers. Once we really start seeing a decline in hiring, once we start seeing a decline in hiring, start to see a decline in mortgage applications, start to see, I need the data to start hitting consumers, because right now business media has been spinning, for those of you guys who watch it, the fact that consumer strength is strong. Have you guys heard of that? When they're like, well, the American consumer is still strong according to the data. We need that to happen. When that happens, that's when that's when shit starts to hit the fan. We need to start seeing consumer confidence at all-time lows. That's when we you got to go all in, man. You got to go all in. Now, some people say, well, say, don't you short into strength? Yeah, you can short into strength now. But you're going to have to be patient. It could go against you. Just wait for the confirmation. You don't have to be at the top all the time. You don't have to be at the top. Guys who trade monthly charts, they never get the top, but they are some of the most profitable traders because a monthly chart is so damn accurate, because it's just so much more information than, of course, an hourly or a daily chart. But the daily guy is already short by the time a monthly trader gets in, but the guy on the monthly chart is just as profitable. Sometimes more, because he doesn't, have that many false signals, if any, most of the time. A good example of that would be Macy's. A good example of that would be Macy's. That's probably not the best. Let me see. Yeah, there we go. A monthly chartist, he's really late, but he's able to get in. Let me change that to 25. There we go. He's able to get in, and look at that short. Again, this is my 25-10 strategy on a monthly chart. A monthly chartist is able to, using 25-10 or whatever moving average you use. But again, for me, it's 25-10, and that's what I teach to other people. It's just spot on. Spot on sells and buys. Let me get this Keltner channel out here. Spot on sells and buys. A monthly chartist is really a master of patience. A monthly chartist is a master of self-control. It takes a different kind of trader to trade on a monthly chart, man. Typically, those are people who got other things going on in life. They just don't have time to really be in front of a computer like that. And or it's sometimes, many times it's people with a lot of capital, who just don't have time to. And they're smart enough to know that you don't day trade when you've got $1.5 million, $2 million, $3 million in the bank. You don't day trade that kind of money. You just don't do that with that kind of capital. You said that's why you're a technical purist. Price decline will precede the fundamental data. That's how it has been happening, Dollar Will. That's how it has been happening, but we're reverting back to when fundamentals matter. So right now, absolutely, technicals matter, but as you can see, the recession is literally a reversal of that. That's literally what recessions are caused by, is the fact that people start to question fundamental data. Booms are led by simply technical patterns. Oh, wow, this is hey, we're growing up, 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 and up, and up. I don't believe that. I don't believe that technicals always lead. I don't believe that. I don't believe that technicals always lead. I don't believe that, because if technicals always lead, what would have happened today? We would have already seen that. We would have already seen that. Just today. I just gave you an example today. The market's going down due to fundamentals showing industrial output is now the worst since 2009, right? So that's fundamental data. So now technicals are responding to fundamental data. Everybody who had their chart up last night was bullish on the market. Now now the game's changed. Now the game's changed. So I can't say that the technicals lead all the time. You know. Let's see what else is running out here. Where's Lowe's at? Lowe's is another one too. That Lowe's is interesting because Lowe's is a second to Home Depot, but they've been getting thinner, closing some stores, letting go of some people, getting thin. Been really interested in Lowe's here above 117. Looks like we're not going to get there. Lowe's is interesting here. I want to see Lowe's beneath 105. I might want to start selling everything above that. But we're seeing some hesitation up there in low. It might be something you guys might be interested in here. This is the monthly chart in low. Let's go to a daily chart. Spread it out a little bit, and you can see here's the hesitation on low at these higher prices. As the market starts to question some of that probability up there of value. Absolutely. So you give technical calls on indexes. That's what's up, man. Then yeah, congrats to you. So you made a lot of money with Beyond Meat. Yeah, Beyond Meat is a nice winner, and I got a Beyond Meat trade that's real sitting pretty right now. But with the move today, we're gonna be looking at. I think we only have 10 more days in the Beyond Meat trade. Only 10 more days left. Shout out to people who were following me in that Beyond Meat trade. And then, as I said in that video, 120 to 150 was where I saw Beyond Meat going to be all month. And sure enough, that's pretty much where we're going to be. It's going to be between 120 and 150. And it's holding up very well. Whether you took the 205 trade or the 196 trade. Again, 110 was the low. I don't think we're going to see 110 at all, but never say never. You know how trades go. But, this is a trade that was a 60-day trade. We're only holding it for 30. We only got 10 more days left. We did this trade on the 12th. So 10 days left. Some guys who just said, hey, I'll do the 30%. You can go to 30%. You're already out the trade. It was like a week ago if you only get 30% of max value. Max value, I believe, was $1,246 on this non-directional trade in Beyond Meat. And it was really nice because last month Beyond Meat had some really nice IV. The IV is pretty much worn off now, but Beyond Meat was making some huge moves. Last month, and that's what called for that iron condor at the time. So now it's just pretty much been absorbing all that implied volatility. It's been looking good. Yeah, yeah. Is in the stable space, sector rotation destination. Okay, okay. Ready to jump again. Let's take a look at Roku. Man, Roku. Hey, man, I can't win for trying it when it comes to Roku. I just leave that alone. I just leave that alone. I tried to do a non-directional move with Roku, and it went straight directional. It went straight directional, and took a little bit out of my pocket, almost over $1,200. Luckily I since got that back, but Roku is a beast unto itself, man. But long term, I learned to love the product. I never had it, and I think that's what had me so bearish about it to begin with. I was just thinking of this box that delivers services, and well, you can just get a Kodi or a Fire Stick, and when you actually use the product, it actually makes sense. He's got a whole bunch of different services on it, and you got a lot of people who will use this, to get other streaming services. So I think Roku's a winner long term. Yep, definitely got more competition now out there with the Charter announcement. If you guys remember Charter, which led to me losing on that trade, came out saying that they're going to be offering a free streaming box to all of their internet customers. That's nearly 27 million people who are going to get a free Charter streaming box. So hell yeah, that's going to play into into competition for Roku. So it was justifiable that the market was going to 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 take that news harshly. And you also had a short seller come out like literally on the next day as well, and Roku at the same time should have paid a little bit. I mean, RSI wasn't that bad, but it was relatively elevated to justify a $65 move though. I didn't think that much, but it is what it is. But Roku in the end still I think is a company that's going to be around for a long time. But nice move on Roku. Leon, you said any type of meatless products is going to make money. Yeah, the thing about that is the fact that uh, I don't think Beyond Meat is going to be at where we see it now. I would not be surprised to see Beyond Meat at half where it is now next year, this time next year. Just because the thing about particularly when it comes to food services, when these processes become cheaper to implement, or when large scale competitors come into the space, it really hurts, companies like Beyond Meat. It really hurts companies like Beyond Meat, and you gotta also remember Beyond Meat too is, there's a lot of issues there when it comes to their stock. I mean, it's very very low float. It's very hard to borrow. So there are other things going on beyond the fact that it's a high in demand product that are keeping its stock price up there. Let's take a look at where we are right now. Okay, all right, ladies and gentlemen, we are going low, low, low. I love it. I love it. Like I said, I'm still holding on. I'm still holding on. I'm still selling my 30, 25 SPX. Again, I still got a whole lot of time left on that. Still got a long lot of time left on that. And again, if you're looking to sell that, uh, maybe wait for, or no, you probably don't even have to wait for a pop here because we're still at 42, 43 RSI. So very much could possibly have another leg lower coming tomorrow for the SPY. Uh, 2:30, 3 o'clock, we tend to see a little bit of a bounce start to occur. Let's zoom in a little bit on this. Let's get to 15 minutes. All right. So yeah, so again, we'll start to see a little bit of a bounce possibly happen here, as this is the 15-minute chart here. When you get to these RSI levels, might start seeing a little bit of a bounce here. This is the SPY. Let's see XLI for probably some. There you go. Here's XLI. Again, pure industrial play. In a move like this, you want to go definitely to the sector that's really being affected the most. SPY is a decent trade, but then you got, the apples and all that in there. You want to go straight purely to the industry being affected. XLI. Here, 21 RSI in the 15-minute chart. So, of course, in short-term or day trading rooms all over the country, you got guys who are probably looking to buy some XLI here on a very, very, very small bounce. I mean, these guys are able to make money on a 20-cent move, a 30-cent move, because they're paying with, hundreds of thousands of dollars in capital. Leon, you said you bought it at 46 and sold it at 200. Shout out to you. Shout out to you. What's going on, Gerardo? Yeah, Beyond Meat was a beast, man. Beyond Meat was a beast. Beyond Meat was one of those stocks that a lot of people were kind of on the outside looking in, like how high could it go? But shout out to you. You jumped in there and made that happen. Boy, XLI's not giving people no breaks. Let me see here. Let's go a little. It's the 5-minute. Okay. All right, so it's rounding itself out a little bit now. But boy, it's been an ugly day. It's been an ugly day. But yeah, I mean, like I said, tomorrow could be another rough day for the markets. But then that's why, again, playing the futures, it can be so lucrative. What's going on in the Qs? Okay. We got the Qs. And again, the fact of the matter is IWM has been telling us something for quite a while. I've been watching IWM. There are a couple other small cap ETFs that are really interesting you can watch as well too, but IWM definitely the most liquid out of all of them. It's been telling us something. It's been telling us something for a long time here that something's wrong. Something's wrong, and small cap doesn't always lead. Small cap doesn't always lead, but as the market had been going higher over the last couple weeks, IWM had practically been doing nothing. And now IWM coming back to retest that 145 support. And you can go ahead and just sell. Forget about 160, 165 now. You go 30 days out, whatever's on 160, 165, forget about it. Forget about it. Yes, indeed. What's going on with you, Gerardo? What you trading right now, bro? Let's see what else is out here. I'm sure all the CRC, boy. This is the 50. This is to be a $50 stock just back in October. Now trading for $9. Man. Let's see what Visa is doing. Yeah, Visa, MasterCard. These are also some stocks that you want to look into. Visa, MasterCard. Now they don't have the most liquid options, but definitely some stocks that are trading at some all-time high levels that it just bounced off of those. Just bounced off those. They're gonna do their best to keep prices going higher. All right, because again, these people, they've made millions, hundreds, billions of dollars. They don't want to claim taxes on that money, so they're not trying to sell. Their idea is to keep it going as long as they can. Long as they can. Look at that. MasterCard can't even go negative. It's just fighting just to stay positive right now. What happened to the 25 moving RSI? Still use it. I just been talking about it last hour and a half. You must have just came in. Yeah, in the course that I teach, that is going to be out here, hopefully end of this week and next week. It's the 25 moving average, 25 and the 10 in association with the Keltner channel. Right? And we teach that in association with the Keltner channel and how you can use the Keltner channel. Well, MasterCard probably isn't the greatest stock to use that on just because it's so directional. But how to use that to create opportunities for yourself and make trades. So you'll see that when that gets released shortly. I don't want to give it out here because otherwise you wouldn't get the course. But using 25, using 10, along with the Keltner channel and then a simple RSI is really all you need. The more indicators you have, the worse it actually is. In fact, when you sit down with traders who are really good, some of them don't even use any indicators at all. And not just because they never have previously. It's because they can literally look at the chart and they could already know what the indicator would say. They would already know where the indicator would be just looking at the chart. You talk to those guys who've been in the game like 30, 35 years, they're literally the only thing they might have on the chart is like RSI and MACD. Because they already know where the moving averages would pretty much be. But yeah, all that's going to be in there that I'm going to be teaching. And that's just because, I've been pushing everybody else's stuff. But when I go out and about, when people ask me, oh man, how do I? So it's just time for me to have my own thing. Most of you guys already know how to trade, so it might not be geared towards you. But it's going to be something for a beginner who has no idea what they're doing. That I can say, hey, this is mine. And of course, if you have any questions on it, let me know. Here's Walmart. And again, when you're looking at the Keltner channel, the sell signal is when the candlestick breaks the bottom of the channel. And so this is a beautiful sell signal right now going in XLI. So on the daily chart, you could then go into a put call spread or bear call spread and sell 77 or 78 in anticipation that this may bounce may bounce out of the channel back into the channel but continue to go lower. So XLI could do something like that. Right, and then of course the buy signal is when it pops out of the channel to the top side. Nice move here on XLI. And of course, here's the crossover. Here's your 25-10 cross for the bullish move. Confirmation on the Keltner. But here's your sell signal today. Confirmation on the Keltner. Crossing beneath the 25 moving average. This is the daily chart. Obviously, the hourly got you in there much earlier. Right? The hourly got you in there much earlier. And again, that's the thing about hourlies. You do get sometimes some false signals. So that's why a higher time frame is always preferable. But boy, XLI taking a huge move. 2.3%. This is getting ugly, folks. Where are we at on the 5-minute? Woo! Boy. Here's the 5-minute. And look, that selling has been strong. Understand that gold line, let me get the Keltner channel out the way there. That gold line is the 10 moving average. That's a very short term. I mean, it's pushing beneath the 10. It's not giving you any. I mean, this is really confirmation of very strong selling in the industrials right now. This is very strong selling momentum here. Yeah, that's a beautiful move here. And you can just see in comparison to some other recent trading in XLI, this is a very strong selling confirmation. Very strong. What's up, Najee? You said you already own stock in Nike in your stash account. That's what's up. That's what's going on, man. That's how it starts, man. Congrats to you. That's how it starts. And you just build up a position over time. Nike pays dividends. You reinvest those dividends, and that's how you can build a little nest egg for yourself. You know, eventually, you know, include some other trading strategies. Here's Nike. Selling off a little bit today based on the news. Like so many other stocks. But again, you know, you just continue to watch it. Boy, Nike has been going up in the last couple of days. Huge, huh? Nike was up almost $5 this past 2 weeks. Actually, higher than that. Almost $10. Do you think it would be a great idea to transfer your Nike stock to a broker and sell covered calls? That's a good idea. I mean, Stash, do you like the platform Stash? I mean, if you've got a broker where you're doing trading in there, I would definitely move that stuff over there. But if you like what's going on in Stash, if you feel if your Stash is, I don't know if you got it on a kind of like a drip thing where, you know, it's buying stock for you over a period of time automatically. If you got that going on, then let it keep doing its thing. But if it's just sitting there and you are actively trading in a brokerage account somewhere else, then yeah, move it over there so you can kind of consolidate all your activities under one platform. But I like the idea of selling covered calls. You know, maybe hold off. I wouldn't do that. Well, actually, that probably might be a good strategy to do now. You know, where we are with the market. That actually sounds like a good idea, Najee. Now that I think about it, I would do that. I would definitely do that. I would definitely do that. I gotta learn a little bit more about that stash account too and how that works. Because I'm getting it confused in my head with acorns. Is it kind of like that where if you spend then they automatically buy for you or something like that? Where it buys stock for you automatically, whereas acorns saves your change. I started a trading account for your kids. I hope it's a meal ticket by the time they're 18. Could be. Could be. Could be. I mean, Netflix made a lot of millionaires. Facebook's made a lot of millionaires. You know, really jumping in on the right thing can really, heck, Amazon's made millionaires. You know, and that's starting out with not a lot of capital as well. I mean, I know Netflix. There's a calculator on the internet somewhere. Like if you started out with $1,000 in Netflix, you got to six figures sometime at the beginning of 2017 or something like that, based on the moves Netflix had been making. Yeah, I don't know. I didn't ask her how many shares of Nike she has, but obviously, if she's got covered calls and she's interested in that strategy, then she definitely has quite a bit. Okay, it is similar to Acorn. Okay, all right, I thought so. Appreciate you, stock fella. Yes, indeed. Yeah, covered calls is a really good account building strategy as well too. When you talk about building account size over a period of time, covered calls is a great way to do that. Really great way to do that. Mm, Nike. You know, been looking at some industries that would be affected. Obviously hotels. Um, Man, there's so many industries that could be affected in a global slowdown. Clearly financials. There's just so many businesses um, that would lose, you know, due to the outflows that would happen in passive investing as people try to pull their money out. And that's, again, we're not even talking about the kind of outflows that we're going to see, not only just in a recession, but when these baby boomers, you know, now totaling what 60, 65 million of them start pulling out their capital out of the marketplace as they, need to live. Um, 20% of them who have no retirement savings at all. So it's going to be interesting to see how these pension plans, many of them who are underfunded, are going to be able to sustain trying to find returns to pay these people. So I think we got some historically low levels that are going to be seen. Again, not talking about 2020. You know, I'm not even talking 2021. So guys are so short term. My mind is already 2025, 2026. You know, you can't show me where we'd be at higher prices at that time. I don't care how big the millennials are, because people are saying, well, oh, the millennials, they're bigger than the baby boomers. Well, if most millennials are broke as fuck, what does it matter? If most millennials are broke, which most of them are, what does it matter? You know? The money, for the most part, right now is in the hands of the baby boomers. They've got all the money. They've got all the money. And a lot of them are in the market. You know? I got a trade that I'm going to post. I was going to do it today. Maybe end up having to do it tomorrow now because I'm a bit behind. I got to finish up some beginner lessons in the course. But it's an oil trade. It's an oil trade. That is a beautiful iron condor oil trade in a futures trade. I think that's going to get people really interested in knowing how to trade crude, because the futures market is really the only true way to trade crude in a way that makes sense for everyone. I know there's like UGAS and some of those other ETFs, but they just don't do it justice. Right now, all I can say, guys, is you definitely want to, you definitely want to stay short the market now. You know, and again, you don't have to just go straight directional by going and buying a 293 put. Uh, sell 296, sell 297, go out a little bit. Again, the market could bounce tomorrow. It could bounce for the next 2 days. But what we do know is that those price targets that many of us had on our screen earlier of 310, 305, numbers that we really thought, we could see over the next 7 to 14 days, those are, I don't know now. I don't know about that now. That's a great opportunity for you to, take a trade in those and take that theta value, whatever's left on there after today's move, and put that into your trading account. Appreciate you, Bigger. Appreciate you, man. Yeah, absolutely. Yeah, I'm just checking in on people, seeing what's going on. Seeing what's going on. Shout out to everybody who stopped in the house to watch. I'm gonna let y'all be in just a bit. Let me take a look at IBM. I've been seeing some guys using line charts. I don't know how they do that, man. Because you can't really. I don't know. Some guys are using lines. Some guys using that hanky. I call it hanky ashy. I tried the hanky ashy stuff. I couldn't really catch on to that stuff either. At the end of the day, candlesticks just do it for me. IBM, that's not doing nothing. Where's Coke at? Yeah, I'm just, you just want to stick to the stocks that have really made moves. Stocks with a lot of meat, the Walmarts, the Home Depots, a lot of volume, that are going to be able to give you a nice move downward as these, again, ETFs start to get some really serious outflows. Look at Apple giving the whole day back. Look at that. Giving the whole day back. High of the day was 228.22. Giving the whole day back. Nice move on Apple for the shorts there at the top. Boy, look at that. You had the morning move and then gave it all back. Look at that. Now you're probably going to bounce a little bit here, but end up filling the gap here maybe over the next several days. But nice move there on Apple. Say candles tell the truth. Yeah, I mean, I just can't do anything else besides the candles. You know, I looked into other things else, but it just seems so complicated. It just seems so complicated. So interesting because Apple was, again, the market leader yesterday. Still above yesterday's price. So, I mean, obviously over the last, a couple of days, it's still been a very nice stock to trade if you're long, but definitely look to take profits. If you've been in Apple for the last couple of days, you definitely probably took profits this morning in Apple after it gave back the whole day. And we'll see what the future looks like for Apple. Not so bright with today's news. And it's going to be really interesting to watch how the business media is going to spend the next couple of days, because that was a very, very ugly number. But they're going to find a way to spin it. Give it to CNBC. They're going to find a way to spin it. They're going to bring up all the clowns who are going to say, I still think we go higher here. The American consumer is still strong. That's their favorite line. The American consumer is still strong. That's their favorite thing to say. Says Wendy's is up. Yeah. Well, all those burger companies should be up, man. They're taking EBT now, man. Have you been seeing that? You're able to use welfare food money at Wendy's and Church's Chicken, and I mean these people are just, what a violation of government. When you can use tax dollars, when you can use food benefit money that is supposed to be used to buy what we hope is going to be healthy and nutritious food for your family, and you turn around and go and buy Church's Chicken and McDonald's, and I mean that's a violation of government, man. That's major violation, and that is cronyism in its finest. Well, not cronyism isn't the word for it. There's a word for how, I think it is cronyism actually, when business and government, work together to, create benefits for each other besides the people they actually that government represents. I don't think cronyism is the right word, but there's a word for that. But that's wrong, man. Yeah, they're taking EBT now, man. They're taking EBT now. In fact, Burger King is doing it too. Let me see if I can. So it's horrible, man. Can I save this image? Let me see if I can pull it up for you guys here. Yeah, here it is right here. Look at that. We accept EBT. There it is, man. So that's your government dollars now. You know what I mean? I used to call dudes baby mamas to get some grocery money. Now I got to call them to get that Whopper. Using your baby mama's card to get that Whopper. That's crazy, man. So, yeah, I mean, that's just plays into anything to juice up the bottom line, man. Anything to juice up the bottom line. These companies will do it. Because look, they're feeling the pain from people eating healthier, people, not wanting to feed their family. But hey, We know that individuals at the bottom of society many times are in food deserts, right? They don't have access to good, nutritious food. So if we open up the possibility for them to be able to go into what is typically located in their neighborhoods, which are junk food places like Burger King and McDonald's, by the you know handful, that's a source of revenue for them. That wasn't available to them before, because many of the people who work there are on those food programs. So now the very people that I pay are now going to bring their families back to me and give that capital right back to me. It's fucked up, man. Ah, do your thing, Leon. Do your thing. I appreciate you watching, bro. Do your thing. Enjoy the rest of the summer, whatever's left. I'm about to head out here in a minute. Damn, it's been 2 hours? Shit. I always do that, man. I always do. I'll be like, oh, yeah, babe, I'll just be 10 minutes, babe. I'll just be 30 minutes. And I start running my mouth about the stock market, and that's what happens. Ooh, Goldman Sachs back into the zone. Goldman Sachs is one stock I've been looking at too. Uh, Goldman Sachs, another company that been losing a lot of money on their retail business. They decided to open up a retail banking chain called, I think it's called like Marvin. They've been losing. They've been losing like 1.5 billion dollars on that operation. Goldman Sachs trying to turn itself from an investment bank into a retail bank, and they just haven't been doing it right. They've been really doing bad with that. They also opened up an operation with Apple, with the Apple Card, and there was some rumblings the fact that they were allowing people with 600 credit scores to be able to get the Apple Card. So people are questioning, what's going on with that, right? Because 600 credit and Goldman Sachs doesn't go together, right? Doesn't go together. So you can Google that. There's quite a few conversations around that as well. So Goldman Sachs been struggling with that. They got an earnings announcement coming up here too. When is that? October 15th? Okay. So that's going to be interesting to see how well they do there. For the most part, I guess it's been pretty good. But many of these banks, obviously for the best exposure, probably go ahead and get XLF. But so many ways to play this market. So many ways to play this market and trade it safely. All right. So let me go ahead and let you guys go. I appreciate you guys for coming. I mean, this really was an impromptu stream. Really popped out of nowhere. And I'm glad you guys were able to join me live today. And somebody mentioned I should just go at least live once a week. That sounds like a good thing. I just be feeling like I'm not giving you guys enough content. I need to get back onto that. But so many things going on here. But I appreciate everybody who joined me in the chat room. Leon Boontz, Stockafella, Bigger KH, M1 Gunner, LK Ra. Who else was in here? Quite a few people were in here. Shout out to all of you who were in the building today. Let me take a look here. Oh, yeah, see, Bat Scientist was in here for a while. I know I caught him at work, so I appreciate him coming in here. I know you were at work, bro. So I appreciate you coming here knowing that you were at work. Appreciate that. Yeah, Bats, appreciate you, bro. Appreciate you. Yeah, Chris also, Chris, appreciate you, man. 3Jam Ilix Johnson, appreciate you. Donzel SX, appreciate you as well. Again, you guys can always message me on Twitter. Message me on Twitter. I'm also on Instagram, 60-day trading as well. Look out for the course dropping soon. Definitely going to be doing some live streams to be promoting that, pushing that out there for people. So I'm just finally glad I have my own thing. After pushing a lot of other people's things for a year. It's very much in the vein of what Tim Sykes' first video was, where I've got the PowerPoint. I'm just really breaking it down, cracking the little things here and there, and really giving you an up and down synopsis in a way I think people would really have an easier time understanding that. Who don't want to read books, because a lot of people just don't want to read PDFs anymore. I got a PDF website. Nobody reads it. Nobody reads those books. So I think a video is definitely what the future is of education, and courses just are the future, man. You got people who decided, hey, instead of going to college, let me just go take a course in whatever it is that I want to do, whether it be coding or programming. I think the same thing, but you know what I'm talking about. People aren't going to college for that. They're just going to get a course. So this would be a course that will teach you spread trading strategies, specifically iron condors, bear call spreads, bear put spreads. All right. So giving you an opportunity to learn how to trade in a way that doesn't make direction immediately, what's the word for it? Even if your direction doesn't go its way immediately, it doesn't hurt you in the long end, as long as you're eventually right. Yeah, I did see Schwab doing that. We talked about that earlier, about Schwab. And again, it all started off to Robinhood. Robinhood kicked all of that off. They've really changed the game. They've really, really, really changed the game. So now with no cost trading. Now I saw they said they only were doing that with stocks. I don't know if it's going to stocks and ETF. Oh, and options. Okay, wow. Oh, okay, and options. I was thinking it was only going to be stocks and ETFs, but if it's options as well, whoo! And Schwab has a good platform. They've got a decent platform. It's not as pretty as TD. It's not as pretty as E-Trade. They got a decent platform over there at Schwab. I was with them for a little while. Until I got myself onto Interactive Brokers. But I think now the ball's in TD Ameritrade's court. They're gonna have to make a change, and that's going to be a huge trade change for them, because Schwab is a money management service. Schwab manages money. They have actual salespeople who go out and get accounts, whereas TD, they really are a brokerage house, right? They make money on those commissions. So that's going to be a radical change to affect that. That's going to affect TD, So they're going to have the ball's in their court. So it's going to be really interesting to see how they react. I know E-Trade was trying to change up. I think they got a sales thing now going to where they're trying to kind of do like what Schwab does, but I know their stock is being affected by what's happening today. So, and at the end of the day, it's all going to work in our best interest. This is what competition does, and that's what makes America so great. These companies are going to fight to do what they can to earn our business. So it's a good thing. All right, guys, let me get out of here before I spend another hour with you. Until next time, trade well. I'll talk to you guys later. Take care.